let's talk about Home Plus and Home in 5 for down payment assistance with FHA. So they have a 3% down payment assistance option, a 4%, and a 5%. First and foremost, the rates are the same no matter what mortgage company you go with. The only difference is they give the lenders the option to charge an optional 1% charge of origination. Nova doesn't do this. If you're having a hard time getting offers accepted and you feel like closing costs are high, that you're working with a lender on a down payment assistance program, you need to ask them if they're charging that 1% origination, and then if they are, you need to refer the client to me, because I'm going to save you client a lot of money, and I'm going to make your offer a little bit easier to get accepted, okay? But the way it works, the rate's the same on the program no matter what. So if you take 3%, the rate as of today was 2.875. If you take 4% down, the rate as of today was like 3.125. If you take 5% down, this is the kicker, the rate's 4%, and that hasn't changed for weeks. It's pretty much stayed the same when it comes to that rate. So what does that mean? FHA requires 3.5% down. If you get 3% down, that means your client needs to come up with that 0.5% down plus closing cost in this market, plus appraisal and home inspection. So you're looking at roughly, like, let's call it $1,500 on an average purchase for the 0.5% down. Then you got another $5,000 for closing costs, give or take a little bit. So that's now $6,500 plus appraisal and home inspection. You're at like $7,300, $7,400 total out of pocket at that point in time. Now the rate is very different, very much small change between 3% and 4% down. So I always suggest doing the 4% down. That covers their down payment because they're getting 4%, and the FHA requires 3.5% down. The other 0.5% can go towards closing costs. So now you're looking at a client that might be coming out of pocket with, like, say, $3,700, $3,800 plus appraisal and home inspection. Much better situation. But then let's look at the 5% down option. That rate's scary. That's 4%, right? But the thing is, they're going to come in with maybe $1,500 plus appraisal and home inspection. That sounds awesome. Most of these clients end up refinancing because of our return client discount. So in a year to 2 years from now, which they can refi sooner than that, they can after 6 payments, but it all depends on equity at that point in time, they're going to refi with us. And they're going to get a cheaper rate because Nova does a big return client discount. So if we need to get them into a home and keep money in their pocket, and they can qualify for the house they want due to debt to income ratio with the 5% down option at a 4% rate, which, let's be honest, a 4% rate is still pretty awesome. Like, a lot of our parents had rates in the 10, 12, 15% at one point in time in their life. So 4% isn't bad, but when they refi, you're probably going to be looking at a rate in the 2s anyways. Now, the money they get, it's forgivable after 3 years, but they forgive a portion every month over the next 36 months because 36 months in 3 years, right? So you take the amount they got, you divide that by 36, and they forgive that portion each month. So what does that mean when they go to refi? They don't have to pay it all back. It's actually a smaller portion. So we got to get past that talk of 5% with the higher rate is scary, because if some of these clients don't have the money, they just need to accept the fact on that and then bank on the fact that they're going to refinance down the road. Cool?